Please, I need to be sure you can hear me. Lilia, you can. Okay, is your mic still open? Okay,
Yes,
you
I
can
can
hear
hear
me.
you.
Mr. Joseph, it seems there's no noise at your end. Let me leave your mic open. You can leave your mic open if there's no noise at your end, Mr. Joseph.
Yeah. All right, sir.
All right. So, what do we have here on gold? This is a shooting star. This tells me there's a high probability that gold will be bearish this week, this coming week. There's a high probability that gold will be bearish. Reason is that we had a shooting star on. Okay, this is monthly time frame. This is monthly time frame. So this monthly candle has not closed. So we cannot make a decision based on the monthly time frame. If we want to make any decision based on the monthly time frame, we have to wait for the monthly candle to close, which will be the end of the month. Okay. So
yes, sir.
Since we're considering or we're looking at the weekly market outlook, so we need to work with the weekly time frame. But let's look at the monthly. Now, this is the first time gold is hitting this level since 2008. This is the first time gold is hitting this level. This was the previous highs on gold. But this past week, gold broke out from that high. You can see this is the first time since 2002. This is the first time gold is hitting this level. So after the market tested this previous high, there was a strong rejection from that level. Traders reacted to these highs. A lot of people started selling after market tested this previous high. Okay, so let's go down to weekly. Now, I think the reason is the ongoing war between Israel and Palestine. Okay, so I think that's one of the reasons gold was able to break this previous high, the ongoing war between Israel and Palestine. Gold is said to be a safe haven. When there is war or uncertainties in nations, investors invest in gold. They believe the value of gold is, they believe gold has a probability of increasing in value. So they prefer investing in gold than currencies. Okay, so the war is the reason gold has been bullish for some time. Okay, so on the monthly, like I said, we'll wait for the monthly candle to close before we conclude if the next month will be bearish. But let's go down to weekly. We want to know the trend for this new week. So what do we have on the weekly time frame? What do we have? Is this a shooting star? Can we call this a shooting star?
We can call it a shooting star.
Right?
Yeah.
It looks like a shooting star.
Yes, sir.
Okay, so this is a strong bearish candle. It's a strong bearish candle, which indicates that the sellers are showing up strongly in the market, and there's a high probability that price will keep dropping. Okay, so that is what we have on the weekly time frame. But would I want to sell gold at the current market price? Would it make sense for me to sell? I think if I'm selling at the current market price, the risk will be very high. The risk will be very high. One should have sold gold last week. Let's look at where price started dropping. Let's go to daily. Let's go to 4 hour. I think this would have been the best entry for gold after the close of this bearish candle, because we had a shooting star and the next candle closed bearish. This would have been the best price to sell gold. So if I had not entered sell on gold at this price? Why should I sell at this price? Does it make sense?
No.
Price has already moved. This is about 820 pips from where I should have entered sell on gold. 800 and something pips. It means that if I'm to sell gold from the current market price, I'll be taking a risk of 800 and something pips, because the reasonable place to set your stop loss on gold right now will be this, the high of this candle. Yes, you can decide to set it at this level, this highs, previous highs. You can set your stop loss there, but there's a high probability that they could hunt for the stop losses at this level before price start dropping. I hope you're following.
Yes, sir.
So for me, it will not be wise to sell gold at the current market price. What we have on daily, let's see what we have on daily. Last Friday candle closed strongly bearish, right? It closed bearish. But if you look at what's previous price action, you will see that we had a support at this level. This is the reason for the rejection, for the pullback. This support and this resistance for this little rejection saw on Friday. Okay, so I would expect price to pull back. Okay, I would expect price to pull back maybe to this high, this previous high, before I consider selling gold. Okay, I could also take advantage of the pullback. Okay, I could also take advantage of the pullback. Let's see what we had on 1 hour after the formation of these 4-hour candles. What do we have on 1 hour? Let's see. Okay, so you can see that this candle closed above the high of this bearish candle. The market is currently trading above the high of this candle. So for me, this is a buy setup on gold. I cannot jump in and start selling gold. So I'm expecting gold to pull back to these highs, this previous high. This is where I will consider selling gold. So should I just hold my hand and wait for price to get to this level for me to sell, or I should take advantage of this bullish move, this pullback? What's your take? We should take advantage of the pullback, or we wait for price to get to this level before we sell? What do you think?
I think we should wait for price
to get to this level.
Yes.
Before we sell.
Yes, sir.
Lillian, what's your take to this point? This is about 364 pips. 364 pips. Should we wait, or we execute a trade, make like 200 or 300 pips before the market changes direction? What's your take? I want to hear from you guys. Chief Unaya, what's your take? Mr. Emmanuel, what's your take? Mr. Emmanuel, I'll mute your mic. What do you think? Mr. Emmanuel, what's your take? What do you think? So you can wait, okay, but I would want to take advantage of the pullback. So let me calculate the risk involved on this trade. If I decide to buy, from this point, but I wouldn't jump in and buy. This is about 86 pips. This risk is much, it's high. So I want to see price pull back to a support level. Let's go to 15 minutes. If I would buy, I want to see price pull back to a support level, okay, before I buy. So I want to see price pull back to this level. This is where I will consider buying gold. Price should pull back to this support. Okay, so if I'm buying from that support, let's say I'm buying at this price, my stop loss will be around 40 pips, which I'm okay with. Okay, so I'll be considering buying gold at this level. So long term, gold is bearish. Short term, gold is bullish. I hope that is clear. Long term, gold is bearish. Short term, it is bullish. Now, if this support is broken, we should expect more bearish move on gold. That is why my stop loss, if I'm buying, my stop loss will be at this level. But if a 4-hour candle closes below this support, then we should expect more bearish move on gold. So if I'm buying gold, I should exit my trade at this level. Very important. You should define your risk before executing the trade. Know how much you're going to lose on the trade before you execute the trade. I hope that is clear. So that's my take on gold. Let's look at GBP USD. So GBP USD, what do we have on the weekly? Last week was strongly bearish. Okay, it indicates that sellers are showing up strong in the markets. So last week candle closed below the low of this candle. Okay, so this tells me supply is more than demand. And when supply is more than demand, what happens to price? Price is expected to drop. That's the information I'm getting from this pattern we have here. So I'm expecting price to drop. Beside the pattern we have here, okay, which looks like an engulfing. If you go back here, you would see that this level was a resistance too in the past. History, they say, it always repeats itself. So we had a resistance here, price tested that level, and there was a pullback from that resistance, okay? A strong confirmation that the peers are taking over. So on weekly time frame, GBP USD is bearish. It is bearish. So at what point would I sell GU? Okay, you can see what we have on 4-hour daily. We had a spinning top here. Next candle has closed bearish. You can see the pullback, right, on daily. And this support that was formed has been broken. You see that the support that was formed here has been broken. So this also confirmed bearish move on the daily time frame, right? This confirms bearish move. But what do we have here? We have a strong bearish candle. The reason for the rejection that we saw on this candle on Friday is this previous support. So the question now is, will this support hold? Will this support hold? We had a support here, and we had another support here, right? You can see support, resistance, non-support. If you go back here too, we had a resistance here, which became a support. So the question now is, would this support hold? This is daily. Let's go down to 4-hour. What do we have on 4-hour? So on 4-hour, you see what we had on 4-hour. This is a reversal pattern, a bullish reversal pattern. So there's a high probability that this pattern will play out. There's a high probability that this pattern, this bullish pattern we have here, will play out. This is a doji. The next candle has closed bullish. So there's a high probability that price is likely going to go up before it starts dropping. Okay, that's my take on GU. If we go back to the daily, at what point we should have entered sell after the close of this candle on the daily time frame? This is where we would have entered sell. And now the market is trading at this level. Let's calculate the risk. If we are executing sell, stop loss will be at this level. Right? This is about 187 pips. I don't want to take this kind of risk. Like I told you guys, I don't risk more than 40, 50 pips on currency pairs. So I can't set my stop loss at this level. So I want to see price pull back to maybe this level, 1.2622, this entry level. I want to see price pull back to this level before selling GU. So my bias for this new week is sell on GU. I want to see price pull back to this support before I would sell. That's my take on GU. I hope that is clear. I hope that is clear.
Yes, sir.
Let's go to, okay, let's see what we have on 1 hour after the formation of this pattern on 4 hours. What do we have on 1 hour? You can see it's not strong on 1 hour. We don't have a valid confirmation on 1 hour. It's too weak. It's too weak. So if you are considering buying, wait for a candle to close above this high, the high of this doji. Okay, and that's because the formation we have on 1 hour is too weak. It's not strong enough. I think we had an engulfing pattern on 1 hour. That would have been a valid confirmation or valid setup. But you can see the setup we have here. It is not engulfing. It is not inverted armor. It is not an armor. So this is a weak confirmation. Are you with me? This is a weak confirmation. So we should wait for a candle to engulf all these ones before, which is this level. We should wait for a candle to close above this high before we consider buying, if you want to buy. But like I said, long term, this week, GBP USD is bearish. Yeah. Let's look at Euro USD. Someone said we should look at Euro USD. Euro USD. I also advise, let's go back to GU. Okay, so let's go back to GU. Like I said on the daily, we should have entered sell at this point, but price had gone past that level. So what do? We wait for price to pull back. Okay, so to have an idea of where price is going to pull back to, okay, you could make use of the Fibonacci tool. Okay, so you could take it, you can take it from this swing high, or you take it from this swing high to the current swing low. Okay, so what do we use this Fibonacci tool for? We use it to identify premium and discount levels. Okay, that's what we use Fibonacci tool for. Okay, so we have level 0.00, we have level 50.0, we have level 100.0. If market is trading above level 50, we would say price is at premium. And if the market is trading below level 50, we would say price is at discount. Or we say that asset is at discount price. If it's above level 50, we would say price is at what? Premium price. Are you with me? So yes, at the moment, going by this recent range, you would agree with me that price is at discount, right? Yes, even if we are to work with this previous range, we have to work with this previous range. This is the previous range, right? Right?
Yes, sir.
This is the previous range, swing low to swing high. Where is price now? Discount or premium?
The discounts.
Discount. So we want to see price pull back to premium before we sell. So it will not be wise to start selling, right, at discounts. We want to see price pull back to premium before selling, which will be above level 50. Okay?
Yes, sir.
Now that is clear. So let's look at Euro USD. Euro USD, Euro USD. Euro USD is positively correlated with GBP USD, right? Euro USD is positively correlated with GBP USD. So what do we have on the weekly? This is a bearish setup, right? This is a bearish setup. We had what looks like a spinning top, right? The spinning top, and the next candle has closed bearish, right? So we have a bearish setup. So, and also let's identify this resistance. Let's go back and see. There's a resistance here. Okay, so we also had the resistance here. And I think that is the reason for this pullback, this rejection, this resistance is the reason for this rejection. So this is a bearish setup on Euro USD. So we should have entered sell after the close of this bearish candle. Now the market is trading how many pips below our entry? From this point to this point is about 130 pips below our entry. If we didn't enter sell at this point, why should we sell at this point? Doesn't make sense. So we need to see price pull back. Okay, price needs to pull back before we execute the sell trade. Let's go to daily. Okay, so this is the last range on the daily. Look at the previous range on daily. If we apply Fibonacci on this previous range on the daily, is price at discount or premium? Let's see. Where is price? Price is at discount. Yes. So we want to see price pull back to premium before we sell. It's not be nice for us to sell at discounts. The risk will be very high. Okay, so patiently wait for price to pull back. If price does not pull back into a premium level, I would not sell. I will not sell Euro USD. I wouldn't sell Euro USD. If you like, it should drop 1,000 pips. I will not sell it. It has to pull back to premium. I hope that is clear. Yes, so if we apply Fibonacci on the current range, what is the current range? What is the current range? This is a swing high to swing low. Okay, so price is currently at discount. So we want to see price pull back to what's it called? Premium. To premium. Okay, yeah. Premium. You know how to identify what's it called? Fair value gap. You want this gap to be filled. This is a fair value gap on daily time frame. Okay. So this is where I'll be considering selling Euro USD. Okay.
Good evening, sir.
Yes, evening. Is that Joseph?
Yes, sir.
Yeah. Any question?
No. I was just
okay. So I want to see price pull back into this gap. I want to fill this gap before I would sell Euro USD. I hope that's clear.
This is on daily, right?
This is daily.
This is on daily time. Okay.
Yes. Okay. So if you go down to 4 hour, what do we have here? This looks like an hammer, right? Let's see what we had on 4 hour after the formation of that hammer. What kind of formation do we have there? Okay, so we have what looks like a spinning bottom here, right? After the formation of a bearish candle, spinning bottom. This is a bullish spinning bottom. So this is a bullish setup on 4 hour time frame. So one could risk buying. But if we go to 1 hour, it's likely there's resistance on 1 hour. We should wait for that resistance to be broken before we buy. This resistance should be broken. You can see on 1 hour, we already have a buy setup, right?
That was what's the price of that resistance?
1.0768. 1.0768. Yes. Okay.
Okay, sir.
So that's it for Euro USD. Long term is bearish. Want to see price pull back into a premium level before we sell. I hope that is clear. Which other pair do you want us to look at? New Zealand USD is positively correlated with Euro USD and GBP USD. So if you're considering selling Euro USD, you should consider selling New Zealand USD. Okay, which other pair?
Yes, sir.
USD CAD is negatively correlated with GBP USD. Okay, that means if GU is sell, you should expect a bullish move on USD CAD. Okay, so let's start with the weekly time frame. So you can see last week candle closed bullish, strong confirmation for buy, and buy. Okay, let's see, we had a support here. And if we apply Fibonacci on the previous range, which is the swing low to swing high, here is price, discount or premium. Discount or premium. Is price at discount or premium?
Is a discount, sir.
Discount. So, and we had a bullish setup here at a previous support level, confirmation to buy. Okay, so work with the current range, which is from the swing high to the swing low. One see price pull back to premium, which will be above level 50. So you could target this resistance, okay? Or you go to lower time frame, identify. Let's go to 4 hour. Okay, so this is a resistance. This is a resistance level. Okay. As you know, liquidity is always at previous highs. Okay. So we have a lot of stop losses at this level. We have stop losses at this level. So those are the areas they will hunt for. Okay. Those are the areas they will hunt for. So if you are buying USD CAD, your TP should be at these levels. You can see the setup we have on daily. This is a bullish setup. Okay, this is a bullish setup. Now, if we're working with the daily, for example, so we had to apply Fibonacci on the daily time frame using the current range. We could take it from this level to this level, right? At the moment, price is at premium, right? Working with this range, price is at premium. So what do? We want to see price pull back to discount. Tested equilibrium last Friday. Okay, we want to see pull back to discount before you buy. And if you are considering buying, if price does not pull back to this level and want to risk buying, you should wait for this high of this candle. The candle closes above this high, you want to risk buying. And if you are buying above this high, stop loss shouldn't be more than 40 pips. Okay, the stop loss shouldn't be more than 40 pips. That's my take on USD CAD. Well, I'm sure between Monday and Tuesday, price is likely going to pull back because we have stop losses at this level. And they want to hunt for the stop losses at this level before pushing price up. I know a lot of retail traders would have executed buy after the formation of these candles, and their stop losses will be at this level. So they need to sweep the liquidity at this level before pushing price up. Expect that on Monday and Tuesday, Monday or Tuesday. Okay. So that's my take on USD CAD. Bearish. Which other pair? Let's look at one more pair before I end the session. Which other pair do you want us to look at? Let's look at one of the JPY pairs. Let's look at GBP JPY. GBP last week was strongly bearish. Yes, overpowered the bulls. So what do we have? Let's start with the weekly. Strongly bearish. So what do you think? Is this a buy setup or a sell setup? What is the structure we have here? Bearish or bullish structure? What structure is this on the weekly time frame? Is it bearish or bullish?
It's a bullish structure, sir.
Bullish structure. So I think the trend is still bullish, right? It's a bullish structure. So we should be looking for opportunity to buy. This is a bullish structure. Okay, you would say there is a change in structure if this low is clear or this. That's when we say there's a change in structure, shift in market structure. Okay, but right now the structure is still bullish. So what do we do? And if we apply Fibonacci, let's say I want to take it from this point or from this point. This is the most recent swing low. So we swing high. Here is price. Discount or premium?
Discounts.
Discount, right? So
yes, sir.
the price will go to premium, right? So
yes, sir.
It's a discount now. So we should look for buy opportunity. We should look for buy opportunity. Let's go down to daily. What do we have on daily? Okay, so you can see the kind of information we have here. This is an armor, right? Formed at a, I think we had a support here. We had a support here. You can see. Go back here also. There's a support. We had support here too. We had support here. So that was the reason for that strong rejection. These support levels. So this is an armor. Would I want to buy at the current market price? I don't think I want to buy at the current market price. Let me calculate the risk. Because if I'm buying from this point, my stop loss should be at least this level. This is about 244 pips. I don't want to take such risk. It's too high. So price needs to pull back. I want to see price pull back. Okay, let's go to 1 hour. What do we have on 1 hour? So I want to see price pull back to what level? I could apply my what's it called? Fibonacci. I could apply it from this point or take it from this point. Let me work with this from this point to this point. So I want to see price pull back into discounts. If it does not pull back to discount, I'm sorry, I'm not going to buy GBGPY. It should pull back to discounts. Okay? It should pull back to discounts before buying. Don't jump in and buy. As you can also see here, the setup we have here on 1 hour is not a valid setup. It's like price has been in a range from this point to this point, right? So it will not be a good time to buy. It's like price has been in a range. So let's wait for price to pull back. Because this is a range, right? And this is a breakout. So a lot of retail traders would have jumped in to start buying. And their stop loss would be at this level, and at this level. So there's a high probability that you want to push price to clear the stop losses at this level before pushing it up. So you should wait for the institutions to do their thing before you jump in. You don't want to follow the institutions. You don't want to trade against the institutions. Okay? So that's my take on GJ. Wait for price to pull back to discount before you buy. And when price gets to discount, you should have a bullish reversal pattern at that zone or at that level. Don't just jump in and start buying because price got into a discount level. You understand? Now, some persons use pending orders. You just set a pending order that when price gets to this level, for example, buy. Sometimes price will break out from that level and keep going down. So I like to see a reversal pattern at that level, considering buying or selling before executing the trade. I hope that is clear. So that will be all for tonight's session. Okay, I've been on since 8 p.m. Wow. Since 8 p.m. That'll be all. I might not be able to take questions. Maybe in the next class, I will take your questions. I appreciate you all for your participation, and I wish you all a profitable week. Remember, we are in the month of December, and price action will be very erratic. Will be very erratic. Price action in December will be very will be unpredictable, very unpredictable. Okay, so as you trade, ensure you apply proper risk and money management. If you want to stay in this game long enough, you should apply good risk and money management. 90% of traders who lose money don't apply risk and money management. They don't use stop losses. That is why they keep losing money. Okay, so if you want to be amongst the 5% that are profitable in this business, apply stop losses. Use appropriate lot size for every trade you execute in the markets. Okay. Do have a wonderful night.
Thank you so much, sir.
Welcome.